everyone. Welcome to Fox and Media Digital. My name's Amy, and today I'm joined by Eleni Delimpaltadaki Janis, who is Managing Director and Chief Investment Officer at Equivico. So welcome, Eleni.
It's a pleasure to be here, Amy, and welcome to everyone who is watching.
Thank you. Of course, you're going to be at the Summit for Asset Management ESG on Wednesday, the 19th this week. So we wanted to catch up with you ahead of the event to find out a bit more about who you are and your company before we meet you at the conference. So just to introduce yourself, would you mind telling us a bit about your background and your firm?
Absolutely. Eleni Delimpaltadaki Janis. I am the co-founder and managing director, managing partner at Equivico. The disparities and market gaps I saw while working in the government sector have ultimately fueled my interest in building a company, in building Equivico, that, like my career, is situated at the nexus of smart, scalable investments and economic justice. Ultimately thinking of my firm and the people around us, the investors, as a force that can create investment change. Equivico is an investment manager that uses impact as a lens to uncover new markets and generate wealth for everyone across the capital chain. Our flagship strategy is private credit, tapping really a huge market opportunity to finance small businesses on Main Street fairly. And I can talk more about what that means. But ultimately, what you find at Equivico is that co-founded by a large national organization, the National Community Reinvestment Coalition, we have funding strategies that deliver on our leadership team belief and experience that integration of capital and social impact is key to growth, especially during times and prolonged times of great economic complexity, globalization, and increasing inequality, increasing poverty, actually, both in the US and globally.
Thank you. Perfect introduction. So you touched on social injustice there. So let's talk about that a little bit more. So what kind of socioeconomic inequality issues does your firm seek to address, and how can credit and private debt be a solution to that?
Absolutely. Our focus in the ESG space, very well, you pointed out that we're focused on socioeconomic opportunity. In simple words, actually really thinking of how can we create what our country needs, what actually many of our countries need, good paying jobs and opportunities for productive lives, for economic productivity for the majority of the population. How do we continue and really grow actually a robust middle class? That's what we are focused on. In some ways, it's in the way we do it is innovative, and really for private equity and private credit, where we focus, is innovative to think about that space, even though the need is traditional and has always been there. What we do is that we focus on traditional chronic systemic challenges and failures of the market to address certain groups of the population and certain certain businesses. Specifically, we focus on small businesses, and by small business in the US and elsewhere, I'm referring to businesses that have less than 100 employees, often actually have less than 50 employees. These businesses actually create 1 out of 3 jobs in the US. Their contribution to the economy is astonishing. Yet, our banks, the traditional lending institutions, largely have walked away from making the small commercial loans that these businesses need. $200,000, $300,000, maybe a $500,000 loan. That's what this business is like. Every business needs access to capital, quality capital to grow. These small businesses have very limited access to capital, and they have had that limited access to capital for over 20 years. What that means, everyone who's in business and growing a business knows that actually that's stopping them from tapping new opportunity for growth. It's creating great risk in the business, because if you have just a few months of a down cycle, knowing that more money is coming, knowing that a big contract is coming where you need some upfront cash to take advantage of it, that actually you can't manage that time of down, of more of a bit of a drop in income, because you can't access that capital, that loan, even though you know you can pay it back. So it ultimately leads to loss of jobs, loss of economic mobility in the US, and a shrinking middle class. And that's what we focus on. In a big, that's our big picture priority. And our flagship strategy is private credit. So we finance responsible small business lenders. We give them capital so that they can finance fairly. We provide capital and technical assistance that I can talk about, but we provide ultimately the capital that these lenders put on the street so that they can make good loans, transparent loans at affordable rate for small businesses, not what we often see in the market, which is predatory loans and crazy interest rates, 50%, 70%, 100% cost of loan annually.
Yeah, I can see the absolute advantages there to the small business owners, and like you said, the economy as a whole from your model. So, how can this benefit the investors themselves? Let's think about the advantages there.
Absolutely, yes. I said earlier that we use impact as a lens for uncovering economic opportunity, for uncovering opportunity to tap new markets. Ultimately, most private equity managers, if you ask them, they will talk about the niche that they have in the market, an opportunity they see that nobody else does. So whether that is finding, for some investors, from some managers, maybe finding the next gene editing solution in life sciences, or us, which is actually finding the portions of our population and businesses that are overlooked, the proposition is the same. It's a niche opportunity, and you need managers like us who actually have depth of knowledge of that opportunity. So we know the communities well. We understand why small businesses can get access. We know why if you're Black, Hispanic, or generally a person of color in the US, or a woman, that you have traditionally been cut off from the financial system. All the groups I've mentioned, we have studies that show that when they apply for a loan, they're actually implicitly, at least implicitly, discriminated against. They're discouraged from applying a loan. They're being offered worse terms, meaning that the risk that the business owner carries is overestimated. There are chronic systemic rather challenges, and we know those well. So we know how to approach the communities. We know how to underwrite, how to find the right lenders that know how to finance these businesses. And what investors get is by investing the money with a company that offers a very unique opportunity, access to an asset class that's really difficult to access, small business lending. Investing in small business lending is really not an option. It's a very limited option in the US market. Investors get access to that, and they get access to real returns. There are millions of small businesses in the US. Our banking system is largely not servicing them. The estimated gap for demand for these loans is $87 billion. We can tap hundreds of millions of dollars of that demand of quality businesses that they can pay back. And that's what our investors get, the opportunity to make good returns with a rigorously underwritten product, and to solve the massive socioeconomic issue in the US, create jobs and multiply your wealth.
Yeah, it's interesting as well that you mentioned about how the banking system is not currently serving these communities or lending to small business owners. So, in light of recent news themes that we've seen in the media, about the bank's activities and attention on private credit, what do you make of this? And does this add further opportunities for you?
Absolutely. Private credit is a very hot asset right now. It's been a space that's grown exponentially by many multiples since 2008, since the last banking crisis, ultimately showcasing a desire and innovation from private equity, the private sector, to come in and step and fill in the gap of increased liquidity crunch, where banks are not lending. Private equity firms have stepped in to do so. So much so that actually in the last 2 years, we've seen deals. We've seen private credit funds financing as much as hundreds of millions, billions of dollars in transactions, providing lending for that. It's a growing asset class. And right now, right this day, because of what just happened in the US with increased volatility, obviously in the banking sector, the fallout of Silicon Valley Bank and other banks, JP Morgan, and other leaders in finance, the large financial institutions know that this space will only grow and that this space really needs even more liquidity. That absolutely, actually, that presents a great opportunity and only showcases what Equivico is doing and what we've been talking about, which is that private credit is a solution for when banks walk away, where banks, for one reason or the other, cannot offer the solution that's needed. Our business owners, the people that we serve, have actually been experienced this liquidity crunch, which may be new to the bigger firms. Some of it is new to the bigger firms. Our businesses have been experiencing that, as I said, for over 20 years. And the opportunity now will only grow. We have a family of investors here, including actually banks, who believe in the right thing. They see the opportunity, and they see the opportunity that we offer to innovatively and more efficiently try to solve this problem and invest and invest with us or in similar solutions.
That's great. And I just want to touch on diversity and equality and inclusion as a whole, actually, because of course your model is very different and you're solving a lot of problems through the way that you channel capital and provide the access to small business owners. But how else do you think that firms can incorporate effective DE&I strategies into their business? Say, for example, they don't lend the same way as you. What can they be doing?
Yeah, absolutely. Diversity and inclusion close to my heart and experience throughout the years. I even earlier, for many years in my career, I studied bias and led large studies, understanding both individual and systemic bias and how those may lead and do lead to unequal outcomes. There are a lot of opportunities along the way, specifically in the lending space. An important opportunity that we also bring to the table is that when we partner with lenders to provide financing to them to make these loans, we work with them through a rigorous due diligence process to understand how their marketing outreach as well as the underwriting model, so the data that goes into determining the risk of a potential loan and whether you make the loan or not, assessing both the marketing and underwriting to see whether there are often implicit bias that may lead to what we call disparate impact, that may lead to an unintentional disadvantage of people of color, of women business owners, or people actually who live in lower economic areas. And that may translate from marketing outreach that isn't, from marketing of loans that isn't distributed through trusted channels or channels that speak to a specific audience. So really invest in that marketing outreach and find the channels that where those businesses are. And this solution is similar to actually hiring and maybe a solution that's more familiar to a lot of companies. But when companies are trying to hire more, to try to reach out to more people of color, one of the strategies that we use here in the US may be advertising and promoting job opportunities more with historically Black colleges. So not very different, the idea that when you look for a loan, when you want to promote a loan and financing, you have to find people where you are and you need to invest in the process instead of saying, oh, those businesses aren't there. There aren't good businesses that can come that are qualified for the product. So that's one thing that we work with our funding partners with. And we also bring our own pipeline of borrowers, both because our co-founder and CRC, the national organizations network across communities, they reach a lot of underserved communities, and because Equivico's own network and my work in economic development in the last 20 years, we have established partnerships with communities, and we can find and bring these businesses to our lenders. On the other side, and then in addition to that, the other part being the underwriting, both our chief risk officer, myself, and the entire team have a deep understanding of how data, such as using data in analyzing a business, can lead to better or worse outcomes in lending. And that's what we bring to the table. So we examine the data inputs such as geography or the use of merchant cash advance by a business, which are typically some data inputs that can lead to an overestimation of risk of certain borrowers. So we bring that expertise to the lender and we sit with them and provide that assistance and help improve the underwriting when it is necessary. It's in many cases it is necessary.
Wow, that's great. Some very innovative strategies there. So I think it's really interesting to see how you can translate some of those approaches into different issues across the business and make it so holistic. So I think there's some lessons to be learned there that firms can take away themselves, hopefully. So we'll save some of this for the conference itself on Wednesday. But just to close off, what are your hopes for the next 12 months? What are you hoping to see from the industry?
Absolutely. I hope to see from the industry, and I believe we will see it, two things. One is that the time of volatility, increased economic volatility, and fear even in the markets, those who truly understand ESG, whether it's the environmental, the social, and governance aspect, will stick by solutions and show, which I know they will, and show how the additional work and many layers of effort that it goes to choose an investment that can meet ESG, true ESG criteria, how it just simply leads to better investment, especially during times of crisis. A company that is governed well, governance in ESG, and company that is mindful of the impact it's having on its employees and its communities, the S in ESG, and a company that is mindful and intentional about environmental risks is only destined and does, as research has showed, to fare better, and especially moments of crisis. It's also true, I believe, that for managers of assets who focus on ESG, we are all in a space that is growing, and we have to try even harder to prove this new model, this new idea. And there isn't a better investment that investors, I think, can choose than a sector of people and managers that are trying very hard to make the case for a new and innovative product. And again, times of crisis tend to show a case and really help even the impact and the success of those managers who are working diligently, they're working hard, and are taking into consideration many and all factors in their investment strategy. So that's the number one that I hope to see from the community. And second two, speaking of bias, is to maybe for investors and the media, instead of being biased and looking for a quick, looking out for potential failures in the ESG sector, and maybe even undue attention and search for failures, to actually really take a step back and have trust that innovation can actually work. And while, of course, for investors, being very diligent and watching what their manager is doing and bringing value to those managers, to also allow the space and the opportunity to see how these managers and assets and allocated capital, rather, will perform in the next 12 months.
Very well said. And I think it's a nice note to end on as well, because it's very optimistic about the opportunities for the future, instead of, some of the discussions that we might have on this channel about how negative it all is and all the risks out there. So like you say, I think there is hope and these innovations will help us pave the way to a better future. So thank you, Eleni, for joining. We'll see you on Wednesday, the 19th of April at TSAM ESG New York. So looking forward to catching up with you at the conference.
Fantastic. I look forward to the conference. I know lots of people are coming and industry influencers. So I look forward to the conversation there.
Amazing. And thanks everyone for watching. You can register for TSAM ESG New York on our website now at Fox and Media. Bye. Don't forget to follow our YouTube channel for more content on challenges and opportunities in asset management, wealth management, and ESG. And don't forget to give this interview a thumbs up and hit the subscribe button.